Now, the unofficial start to earnings season kicks off today after the bell when Alcoa releases second quarter results. Markets editor Andy Cinco tells us what we can expect. Andy?
Scarlett, you should expect the red ink to keep on flowing at Alcoa. You know, sales are down from a year ago, as are prices, Scarlett. So we are expecting Alcoa to report a loss for the third quarter in a row to the tune of 38 cents a share. Sales are expected to plunge $4 billion, which would be down 50% from a year ago. But Scarlett, you know, the stock spiked yesterday after we spoke to the CEO in Moscow exclusively, saying that, quote, he's very optimistic that demand for aluminum is rebounding.
China clearly is out of the woods. We clearly see that the Chinese economy has come back. It's actually growing again. And we absolutely see that China has actually become a net importer of metal. They've roughly imported over the last, I would say, 6 months, roughly 700,000 tons.
But China, you know, is a blessing and a curse for Alcoa. Analyst Charles Bradford of Affiliated Research Group says China has 3 times the number of plants and capacity to make aluminum than Alcoa does. And analysts say they believe that China's state-owned plants have lower costs and therefore fatter profits. Now, while it's hard to come by reliable facts for the Chinese aluminum industry, we can go by one publicly traded company, Aluminum Corp of China, better known as Chalco. And when we averaged out here on the markets desk the gross margins for Chalco and Alcoa, it's clear Chalco is much more profitable, 26% gross margin versus an average of just 16% for Alcoa. And that advantage gives the Chinese an ability to cut prices in a way that Alcoa may not be able to keep up. That issue will certainly be on the forefront of investors' minds, Eric, when Alcoa reports after the bell today to kick off earnings season. Eric?
Thanks, Andy.